Welcome to Investors Insights. Our topic today is New Market Playbook, ? And as we start to dive in today, I have to say that I'm thrilled that February 18th was our 13th year anniversary we're going into. Very excited about that, with 30 plus years in the industry and 13 of those years being at Five Plan Partners. Very excited. So, and thank the two of you for all the contributions that you have made as we have worked with our clients on their portfolios and strategies. I've thoroughly enjoyed doing these vlogs, and I guess we'll have to celebrate all week long.
That's right.
Anybody have a problem with that?
Not at all.
So, but with that, things constantly change, and we're looking at new possibilities in this market. And I really liked our title, the New Market Playbook. Trey, talk a little bit about that.
Yeah, you know, one of the things that's changing the playbook is the new Fed chairperson. We've talked about it in the past, but we got some good data. Historically speaking, when there's new Fed chairperson, within the first 6 months, there's an average 15.6% pullback in the market. The market really likes to test to see what this person is going to do. Are they going to react and lower interest rates, or you know, how are they going to respond to a market anomaly? And so on average, though, 6 months later, the market's up 20%. So, you know, this is kind of a
And there's no guarantees there.
Obviously, no guarantees.
Right, but in our last week's vlog, we talked about history can repeat itself.
Exactly.
And there's similarities here, correct?
Exactly.
Okay. All right.
And this week we have a lot of Fed governors coming out and speaking. So it'll be important because this will be their opportunity under a new Fed chairperson to kind of say their playbook. How are they going to react to this market? And I think we're going to really focus on a lot of those speeches.
Yeah, I mean, I remember, you know, in my career, of course, I started in the 80s, but in 1987, when Greenspan had been in office, you know, just a couple of months as Fed chairman, and we had the stock market crash. That was a real test.
Oh, yeah, that's 36% in 6 months. That's a tough test.
Yeah. And we don't want to go there.
No.
We do not want to go there. We hope Jerome Powell has a much easier road ahead of him. And then, Bobby, you brought up some great points as well, tying into that. Talk about that.
Yeah, so we're seeing some different things with the tax plan. Obviously, the impact is great.
Right.
Forward guidance for company earnings have been looking good based on the tax plan. But we're also seeing confusion in how
That's
companies are
Right.
reporting. And so it really comes down to this. It really comes down to how companies are valuing their deferred tax assets
Right.
or liabilities. And it's confusing because some companies in the same sector are reporting it one way and the other companies are reporting it another. And so, you know, with earnings season, us being in the middle of earnings season, we're seeing companies report and the stock price will jump up, and then once analysts really get down and dirty and review the earnings, it trades back. And so that's adding to some of the volatility we're seeing. And until companies get on the same page, and a lot of this has to do with the SEC and how they're requiring companies to report, but that's causing some confusion.
Right. Well, and for a market that is constantly moving up and down and changes occur, they don't like change.
Exactly.
And so everybody has to just understand with these new tax cuts that, again, this is a new development that we're having to deal with here, and one that seems to be going well. We just got to work through it. So on that note, we hope that you take this information, that you're having a great President's Day, and we're going to keep you informed as the markets open back up this week, and we are tracking the data that's coming in. And one of the ways for you to keep up with the pieces of the puzzle, the information that we're looking at on an ongoing basis, is to follow us also on Facebook, Twitter, LinkedIn. We post different articles and information there for you to follow as well. And please continue, you know, the dialogue with emails and one-on-one phone calls. We like those discussions. We hope you have a great week, and we'll keep you updated. Thanks.